Hi, I am Anna. I come from www.ntvforex.com. 826 after internet down analysis http ntvforex.com news ID 3162D88 26/2023 33:54 p.m. Outlook NBSP ahead of Powell's speech at Jackson Hole tomorrow. Today's big U.S. news releases July durables, forecast Bloomberg at a rise by 4.7% following 7.6% in June. NBSP as always, durables are tricky because of defense and aircraft, so X those, the gain is likely more modest but a gain nonetheless. The expectation is alive and stalking the land that Powell is going to commit to an anti-inflation stance at Jackson Hole, meaning rates are as low as they are going to get and you can forget about curve control. Dovishness remains, but it has hit rock bottom. This has plausibility but depends entirely on the development of the pandemic and on Congress. If it appears we are bending the curve, treatments and vaccines are right around the corner, and the Senate gives some fiscal relief, it's conceivable this is the right viewpoint. Not that the Fed will consider raising rates, just that more extreme measures are not in the cards. Bloomberg offers a different perspective, that zero rates are here not only for this year and next, but possibly another 5 years. Fed Chairman Jerome Powell is slated to provide an update on the Fed's 112-year-old framework review of its policies and practices when he speaks on Thursday to the central bank's Jackson Hole conference, being held virtually this year because of the coronavirus pandemic. I wouldn't be surprised if interest rates are still zero 5 years from now, said Jason Furman, a former chief White House economist and now Harvard University professor. Another former Fed official says 7 years before a hike. Remember, Powell said in June, we're not even thinking about raising rates. If inflation gets over the 2% target, so be it. The stock market should be ecstatic if Powell validates this view tomorrow. In fact, it will be only slightly less ecstatic at the first argument and no curve control, just zero rates indefinitely. Is there a difference between the two forecasts in terms of outcome? No. In terms of mindset, yes. The first viewpoint depends on a fairly optimistic outlook for the economy led by developments in pandemic response and also, not incidentally, stands in opposition to Trump, who salivates at the prospect of negative rates. The second viewpoint embraces a long, hard slog to get to economic recovery, let alone anything driving inflation up, and is a tacit admission that unemployment is the sole target. The bottom line is the same: the Fed is on hold indefinitely. It saw Congress fail to provide the stimulus it was begging for, and declined to step into the fray. Powell's own line in the sand. We said there is a limit to what central banks can do, and we have met it. Whether Powell makes indefinite on hold clear tomorrow remains to be seen. It would be unconventional to get a policy announcement in this venue, but convention got thrown out the window some time ago, and besides, the Fed claims to be ever seeking better communication, aka old-fashioned plain speaking. The more important takeaway for the FX market seems to be removal of the prospect of negative rates in the US, or that curve control thesis, which doesn't mean rates will be raised but does mean the spread between the US and others will remain in the dollar's favor. Never mind that the real return in the US is negative. It's more negative elsewhere. Another factor favoring the dollar is economic developments better than expected, like the Richmond Fed Index and all the housing data. If the 4 big European countries are indeed getting a second COVID-19 wave while the US is bending the curve, that favors the dollar, too. The dollar recovery is hitting a snag so far. Even the leading currency, the Australian dollar, is stuck in a narrow range. That means we need something to unstick prices. It remains to be seen whether that is Mr. Powell or some other event. Fun tidbit: the FT reports PIMCO is closing an emerging market currency mutual fund that lost more than half its assets this year after several of its bets soured and investors withdrew nearly $2 billion. PIMCO had big positions in the Brazilian real and South African rand relative to its benchmark, and also added off-index exposure to the Argentine peso and Egyptian pound. Morningstar analysts said it also had some Turkish lira, apparently. Tidbit: we saw a headline on the front page of the digital New York Times: the Senate is on vacation while Americans starve. And the first thought was this is classic liberal elite exaggeration that drives people away from the Times. Then we saw the authors of former Fed Chief Yellen and first-class economist Jake Bernstein. Yikes, they argue that when 30 million people report they can't afford to eat, the government is letting them down. Not the Fed, Congress, because fiscal action is what is needed. Elsewhere, an airline says it will furlough tens of thousands of employees unless Congress acts. Theta SA New 1. Politics: the incumbent usually boasts of how good the economy has been under his leadership. News flash: presidents have very little to do with the economy, but Trump is taking a different tack. Things may be not so hot now, but they will be far, far worse under Biden. Theta SA defensive posture rare for Trump, who mostly leads with his ample chin. One of the more stupid charges: the Dems will get rid of town zoning and build homeless shelters and low-income housing next door to your suburban oasis. This is stupid because we don't have a federal zoning law. Zoning is strictly a local issue. We are not going to list all the stupid, untrue, misleading and insulting things the speakers are saying at the Republican convention. Suffice it to say they are showing themselves as repulsive liars, if not hysterical fearmongers. Is that any way to win an election? Fear? Well, maybe. Now if only white cops would stop shooting black men, the latest incident entailing cops shooting a guy in the back. It sets off riots, feeding right into the plebs a hand. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors.